the whole intention here is to demonstrate how engagement can sit at the heart of business development. So once you have that engagement and that conversation going, you can then do amazing things. And that's very much at the center of the big picture approach. All employees have a voice. So, and if we imagine everything is connected together in a kind of systems thinking kind of way, then it's about making the connections that we can then build upon. So we'll use some fairly simple structures today in the form of the symbols. But what we'll do in the way that we connect them together, it's really important to connect them together in a certain way, which then brings out those things.
Every business that you can think of has had its business model tested. Now, businesses may not see it in terms of a business model. They may think about their supply chain, like the motor industry in this country, which is going to take tremendous pain because there's so many suppliers supplying so many little things. And the one thing about a motor car is you can't put it together unless you've got every last bit. If you've not got spark plugs, or if you haven't got leads or anything else, you can't make a motor car. So I think every business is having its business model tested one way or the other. Zoom, that we're on at the moment, are having a fortunate test in that they are now worth more. Their market capitalization, or their estimated market capitalization, is greater than the seven biggest motor companies in the the seven biggest motor companies in the world. So they've suddenly rocketed to prominence through serendipity that Martin was mentioning earlier. I think one of the areas that interests me particularly about business models at the moment is this whole question of what a business ecosystem looks like. And we tend to look at business models and use very broad brush labels like key partners and so on. But if you think about it, the ecosystem, and it was touched on, the wine shop that makes sure everyone gets wine that Peter mentioned, and the Italian deli that makes sure you get your cheese and wine, each of them has its own ecosystem, and each of them had to draw on that ecosystem to fulfill the customer requirement. One of the biggest challenges, I think, is going to be that after this is over, and I don't know when over is and what over means, we are going to see that the level of credit impairment amongst individuals and businesses in countries all around the world and in the UK is going to be at a level that it's never ever been before in history. I sent Martin a couple of statistics, and you may well be familiar with these, but basically last year, 4 in 10 UK consumers missed at least one of their credit installments. Banks, 25% of small businesses in the UK last year that applied for bank loans were rejected. 60% of them ended up having to put their own money into the business. And yet banks account for something like 85% of all the funding that small businesses in the UK have. Now, again, you may be familiar with the fact that there are schemes whereby you can get mortgage finance if your credit is impaired in the UK, but then that's because the banks can always come and repossess your house. So in a way, the fact that your credit is impaired is not a major factor for them, because they can always take the house back. But when it comes to unsecured finance, the reality is that if your credit is impaired, you will suffer a range of consequences. In the UAE, the royal family have actually come up with a scheme to help with people that are in jail for debt, because they know in the West it's not seen as a great asset to have lots of people in jail for debt. So the royal family actually have a foundation where they actually settle your debt and let you out of prison. So they still meet the cultural imperative of the Middle East, which means you go to jail if you're in debt, or if you fail to service your debt, but there's a foundation that comes along and bails you out. And so when we look at small business in the UK, the question is, are there parallel types of structures that are going to come along for those small businesses whose credit is impaired at the end of this process and actually bail them out.
But the way I'm making sense of this particular challenge is it's around the partners of organizations, and this is the whole business, which we're going to explore in a minute with the different symbols. But it's actually, is it fair, do you think, to interpret it as kind of a challenge around the finance partners for a business? Is that what is that the information you were sharing?
Yes, no, it seems to me entirely that we often look at suppliers of finance as suppliers rather than as partners. But in this particular context, they're particularly important. They are not just people that come along and give us money. They have to partner with us in some way to help us solve our challenge.
You immediately there have helped me clarify your understanding the difference between partners and suppliers. In big picture terms, suppliers in general, in my experience, are people who will provide you with some resource, and you've said that could be what you've interpreted, but you think it's more of a partner type relationship.
We're going to need suppliers who become partners or who are more partners than suppliers. It's not going to be a cold arm's length transaction. I'll lend you money if you give me adequate collateral and security, etc., etc. I need to partner with you because that's the only way we're going to get through this together.
That's really interesting. So I don't make this stuff up. I'm genuinely intrigued by a connection made there. You can see where I'm putting the opportunity symbol and the arrow. We don't go into a load of depth here, but what we've done is by clarifying the differences between what was a supplier, there may be an opportunity there to open up a conversation with those same third parties around partnering rather than supplying. You did mention in passing, in the absence of this funding, there may be some need down here to kind of self-fund.
There may be a different way of dealing with your customer. So traditionally, you might have had your customer buy something and pay later. And now it might be more a conversation with the customer about paying up front, or at least part up front. So there's a cash flow implication around it. But also thinking about work that I've done for big manufacturing companies who have very large ranges of suppliers. There have been some things coming out recently from government saying, if you are a big company, you should be thinking about how your suppliers get paid. So you might be thinking about paying suppliers at the beginning of a period rather than have them wait 60 days for financing. So there's an assumption that there's more of a cash flow pool in some of those bigger players than there is in a small business. And I'm wondering if there's a conversation that comes in here, a three-way conversation between customer, supplier and government, because government seems to be increasingly willing to help with some of those funding gaps, not long term, but at least short term to help with some of those funding gaps. And I'm wondering if there are more in-depth conversations that are beginning to happen there to start to think about the customer in a different way and how the customer pays in a different way. What I was going to say was that for this to work, there's going to need to be more conversation at the front line. So understanding the people who are on the front line talking to customers, understanding a bit more about their interpretation of what's happening. So you're going to have to get, I suppose, people in management getting much closer to what's happening on the front line and how people are relating.
Well, the thing that first came to my mind, when you said that when directors have to take their credit cards out, it gets a little bit painful.
Yeah.
Actually, I've got a new client who is now looking to restructure his business to become a ethical organization in a very non-ethical industry. And he's also exploring the different business models. So, for example, questioning, should he move to become a co-op? I don't think he will go that way. However, if we are just playing here, why not to open up the conversation to actually involve your team in it and say, this is the situation we are in. We want to keep you, let's say, because we value your input. We work together well. how about we all take some responsibility here and restructure so that actually we can, be resilient and ensure this is like long-term sustainability and short-term survival and chip all in and just have a vulnerable heart-to-heart conversation about what's going on.
Whole question about what that purpose is, does it change and does it need to move on, and actually engaging employees in that conversation is really powerful.
All technology companies are reliant on other technology companies and other technologies. So if you're in the car industry, you're reliant on manufacturing and logistics. And I think most technology companies think that they are kind of at the front of everything, and some are actually halfway down the supply chain, not at the front of it. As Bryce was talking, I did most of my notes on, what might be required nationally in terms of lenders of last resort, national bad banks, quasi-government organisations to hold assets of distressed companies and individuals, etc., etc. And as you've been talking, I've been thinking more about, what does it look like from the point of view of that small firm that perhaps is starting to struggle with impairment. So it seems to me that the real technology things that you need to be looking at are technologies that manage your assets, register your assets, so you understand exactly what it is that you have and what you're managing. Technologies that manage your finances, particularly projecting cash flow and the planning of your finances.
Nice.
I think you have to have a forward plan to minimize cash out and maximize the technology in. So you need a technology plan that says, what is it that I can actually get away with in terms of the next period of time, so that I'm still effective, but I'm not now doing investment that is perhaps surplus to what I require to do. Because I think most small businesses are going to have to redesign their physical, environmental and financial footprint when it comes to technology. And lots of us have learned to do, not me, because I've been doing it anyway, because I work from home, but lots of people have been doing that over the past 3 months and discovering that they don't need as much technology as they used to have. And actually some of the technology that they don't have, which they've now acquired, is better than the technology they had through work. So
he said 4 in 10 missed credit payments in the UK. I think there's also kind of a lot of evidence to say that a lot of people in the UK don't have £500 in savings. So I think in terms of measure, that there's some real kind of, financial kind of facts there. Bryce also mentioned 85% of funding from banks for small businesses. In today's Financial Times, there was a big article around how a lot of the government finance has gone to big companies like Chanel and BASF. And so I think there are some big questions how far money is actually reaching the small businesses that actually need it. And my last measure is that professionally, and part of my background is PwC, I worry when directors start self-funding, in that for me, that's when I see people self-funding, that's when I start getting worried about the state of their business.
No, I think it's very interesting. I mean, listening to Margaret today, ABI, whoever they are in the UK, announced that the UK government are going to have temporary reinsurance schemes so business can continue to access trade credit. So that partnership, government is coming to the party at the moment with schemes that were normally funded commercially, but reinsurance at the moment is a mug's game, because so many people are going to crash and burn that only a lender of last resort can really come to the party. So I think the UK government is showing that kind of partnership support that Margaret touched on. And then just listening to Richard, the tech thing is interesting. Resilience in Switzerland comes about because they have a parallel currency. So when things get tough, they start using barter money, essentially, because that's the only way they can do business with each other. And technology lends itself to that peer-to-peer type of relationship to a very great extent. So I think both those things were very interesting. And Peter's point as well, the reality is for many small businesses, because the bulk in Britain are less than 10 employees, that director funding is almost inevitable. For bigger companies, maybe not, the kind that he maybe was referring to.
Listening to what everybody's been saying, I've been changing the approach of some of my clients, because basically you've been talking about quite a lot of my clients today, the experience that you've been getting. One of the things that I've introduced to them is a completely different way of getting paid. So instead of having invoices being paid within 30 days, they now give their clients a choice of 50-50, which means they pay 50% upfront, 50% within 7 days, or cash on delivery. And in order to make that a little bit better, it's 10% cheaper if you do the 50-50, and then 10% cheaper again if you do cash on delivery. So it's a sort of a win-win for the clients as well as their clients as well as my clients. Another thing that I've been doing with my clients during this period is doing a really good break-even, because even though most of them understand their outgoings, they don't understand the break-even. And this particular pandemic has shown my clients that they ought to have good cash flow, good cushion within the business in order for them to be able to ride through the problems that we're going through. And a good approach to the break even is something that needs to be done for all of my clients. Those are the two things that I have been getting involved with. The third thing is that we have noticed that there are some, what I would call, bad debt givers out there, people who are prepared to lend you money, but you're not too sure how much it's going to cost you down the line. And one of the things I try to avoid at all costs is getting my clients involved with people who may well be taking them for a ride later on. I touched on the suppliers, even though
yes.
I didn't mention the word suppliers. I was talking about suppliers as well, because my clients in the main have got to pay the suppliers before they get money from the clients, which is why they came up with this idea of the 50-50 and COD. So at least they got some money to give the suppliers.
Yeah, so I think it's a privilege going sort of last, because my brain does connections. So there's all sorts of things other people sort of said. They went, oh, yes, there's an offshoot about that. Depending on the size of the business, I think processes need to be completely either rewritten, because I was on a Zoom this morning, and Tata Steel, they've bought the people in their supply chain that would go under. So they now own them because they want to keep the supply chain going. So that's completely changing about what the processes will be there. I was completely thinking about the fact that, really simplicity, when you start with a process, it's more about a logical if that, then this. And for me, this is all segueing in more into relationships, personal relationships. And you can't put a process as well around relationships. And I was thinking about the self-funding piece. It was more than actually, well, what about the crowdfunding piece? I'm really curious about where all the money has gone that governments have provided, and Peter alluded to that. So at the very start, our Chancellor said we're going to make £330 billion available. I'm curious about where that's gone, because then also, in all those time with the fact that everybody's got £500 worth of debt, when Major Tom was able to walk around his garden, he could raise £32 million. So I'm like, where's that come from? How does that work? So whatever processes we wrap around this, I think depending on the size of the business, I think it's going to have to be completely rewritten. And I was thinking as well around, I've had in my mind for a while, instead of a shareholder economy, we need a stakeholder economy. But now I'm going to change that to, we need a stakeholder ecosystem based on what Bryce said right at the start. So any process that needs to be in place that we put around this, I think is going to have to be written as we go along and after, and revised as we understand actually how the relationships are working between where the money actually is and how we're putting things together.
No, that's lovely. Have you touched upon there, Russell, something Alexandra mentioned earlier about the role of people and how it changes the role of the team and the stakeholders? Because I think I heard that a little bit earlier. And again, that's then a little breadcrumb trail through that would then be built on in terms of conversation. If you don't feel that's too tenuous, but I think that's what Alexandra was mentioning about.
I put my thumbs up when Alexandra mentioned the co-op. So I used to work for the cooperative group. Yeah. So a mutual business model was suddenly going, oh yes, if it's crowdfunding that's going on, then that's about everybody having a say within the business. So that does segue more into a slightly different business model.
So I've been in listening mode, but I've also been trying to reflect back and capture what you've been sharing with us all. I think one of the key areas, if you focus on the partners and suppliers conversation, is the opportunity to shift that the nature of those relationships, the importance of technology around financial accounting, and the particular focus that such a scenario places on managing cash flow, self-funding, the emotive response, and that potentially being a signal of a wider structural issue with the business. What that tells me is, whilst we're thinking about the customer supplier arrangements, the key thing that Bryce spoke about was the looking at the business model within the ecosystem and how the business might respond to that. And core to that purpose is the customer value proposition and the positioning. So I've caught the challenge of the business model disruption. I've caught the point that I think Alex was making around some of the values of resilience and sustainability.
If you were at the front of the room, Craig, and I guess you had the team with you that had all contributed to this, what we'd be doing at this point is, whilst there's been emergent, like divergent thinking, you're bringing back the themes, and I guess you'd be looking for validation, confirmation, and clearing up the key connections to take you into the key challenges and opportunities. You could see how that would work, and I hope others would too, I guess, from what's been discussed.
Yeah. So it's interesting in the sense that we've been talking about how the business is impacted by changes or challenges in the ecosystem. And whilst people have been talking about that broader picture, I'd be using the clustering of measures like we're seeing partners and management and admin to really understand it and probe. So where is that felt? How is that impacting the customer? We've already talked very much about how it's impacting suppliers and the overall cash flow position of the business. But fundamentally, if we're going to look at the challenge of funding, where is that challenge felt, and how do we know fundamentally from a customer satisfaction, customer journey perspective, how do we know we're making inroads? How do we know we're building and developing resilience within that business model as we pivot?
I thought it went very well, given the very diverse range of backgrounds and focus on a relatively, what might be seen as a relatively technical issue of where do you get the money. I thought everyone came to the party with some very interesting insights into how it can be extended beyond where it has been in the past. In other words, how do we move from, because we're going to have to, because otherwise no one will ever get credit again, no one will ever be able to trade. I thought Huel's the example of the 50-50 and the cash on delivery is an interesting response. The question of crowdfunding, Craig also raised some of the other issues around funding. And how we can crowdfund or peer-to-peer lending. I think many of those things are going to suddenly, rather like Zoom has bubbled to the top, and many of those things are going to have to bubble to the top. And I think government could play a useful role, perhaps even in putting some funding into peer-to-peer lending, even if they said every time you lend £50, we'll double it, or something like that, like matching finance in the fundraising field. You know, government will match you rand for rand, pound for pound, dollar for dollar, whatever the case may be.
People were able to follow along, pick a focus. We could have picked any focus. Obviously, you can start from anywhere on the board, any point of the business. It's all connected up. So what it does allow you to do is traverse complex issues using simple key elements of the business in form of symbols, making connections. And I hope that means you can see how that creates a great conversation. The fact that kits help with that, big picture kits help with that, all different shapes and sizes, the workshops we've had a bit of an insight into, and then the deployment of that for people development and business development with engagement at the center.